Hi,
Hey,
guys.
everybody. Good afternoon. This is Jason Hilliard from Forecast Capital Management, and Michael and John and I wanted to discuss a little bit about the going-ons in the financial banking system, and just about how those, how everything is working itself out. What are the effects of what's going on in the banking system, and some other relevant details in the market in general. So I wanted to pass it off to John to discuss the banking system and what's going on, and then Michael's going to discuss a few things on portfolio allocation. So, John, why don't you take it away?
Okay, thanks, Jason. So I'm going to start this off. So most of you watched that movie, the Christmas movie, It's a Wonderful Life, right? Where you had, a poor banker, and all of a sudden, overnight, he had a bank run and he was trying to stop it. And all of you have probably seen that movie. Well, we're experiencing a modern day bank run, in our opinion, as we speak. And it's really accelerated the last 2-3 days, hence the reason for this call. Things are getting, this bear market is now the beginning of phase 3, which is the worst phase. This is where things happen very, very fast. And this is where credit starts seizing up. This is where profits disappear. This is where companies go under. This is where unemployment shoots up, so on and so forth. So some of you noticed that we were short some of these crypto banks, and have been for a while. The one that we were short first was Silver Lake Bank, or what's their name? Silvergate Bank.
Silvergate.
Yeah. So Silvergate Bank was one of the more corrupt of the banks involved in the crypto world, and it basically went under a few days ago. Luckily, we were short it, and this is going to be one of those shorts that we basically take to zero, which is kind of cool. I've never done that before. Then we also started shorting Signature Bank, similar kind of thing. There's a lot of fraud in that bank. There's a lot of interesting stuff going on. We also think that's got a chance of being a zero. But what really happened this week that's really freaking everybody out is the fact that a bank called Silicon Valley Bank, which is the 16th largest bank in the country, within 36 hours went away. I've been doing this a long time. I've never seen anything like that. So no one's really ever seen something like that. This is even scarier and crazier than what we saw in 2008. So Silicon Valley Bank is the bank to the venture capital world, to, the private equity world, and so on. So these guys are the 16th largest bank, and they're gone, right? So the FDIC walked in there today and took over the company. So these guys have about 160 billion in assets. This is a big deal, right? And so why did this happen? Well, this is happening because what the Federal Reserve has done by taking rates literally from zero to call it, 5-ish, is they effectively have imploded a bank's balance sheets. So there's probably somewhere in the tune of 800 billion to 1 trillion of losses just on their portfolios that the banks hold. So banks hold. Sorry, I'm trying to figure this out here. So banks hold a bunch of assets, and those assets, unfortunately, they bought them they bought mortgages and loans or whatever when interest rates were at 0 or 1 or 2%. Now that they're 5 or 6, they're sitting on massive losses. These massive losses are creating this bank run as folks start to realize, hey, my bank is not solvent anymore, courtesy of what the Fed's done. So this is the beginning of a bank run, potentially. This weekend's critical. The Federal Reserve needs to do something. This is taking off in much faster way than we've ever seen. So what does that all mean? That means that there's a chance that markets don't open up on Monday. And I don't want to scare you, or we don't want to scare you, but when banks this big shut down literally in hours, it creates panic. So now if you're a banker, right, if you own a bank and you're a public company bank, you're looking at yourself saying, we're no different. We have similar issues to what these guys had. How are we going to prevent this bank run? So, just to give you an idea, Schwab, who's our custodian, alone was down 22% the last 2 days. So this is spreading everywhere, and it's scaring a lot of investors, right? So that's where we're at. I mean, I just want to give you a heads up. We're watching this closely. We actually have made money the last 2 days. We're actually up about 1%. The market's down 3.5%, 4%. So we got you ready for this. Michael's going to explain to you kind of our asset allocation, but we've seen this coming, right? All of you that were panicked in January thinking we lost our heads, the market's up 7%, 8%, you guys are down, what are you doing? What we're doing is we're protecting you from this. This is the real deal. January is just a bear market, bounce. Who cares? This is what Jason and I and Michael have been talking about for the last 14 months. This is what keeps us up at night. How this unfolds and what the Fed does come Monday, incredibly critical. What could the Fed do? They're going to have to backstop this somehow. If they don't, I don't know. I mean, we're positioned for it, so great. But if they don't, there'll be a lot of casualties. A lot of banks are going to go under. The credit markets are going to seize up. A lot of smaller, mid-sized companies, tech companies, startups, they're going to start going under, and so on and so forth. But anyway, with that, Michael, why don't you discuss a little bit of our allocation?
Yeah, certainly. So yeah, like John was saying, we're really trying not to scare you, but we're really trying to just tell you that, hey, we're watching this very closely, and that's reflected in your accounts. So really the last week and a half ago, our data was really telling us that something major was happening, right? You look at the bond market, the inverse of the yields, right? The 2 years treasuries are a lot higher than the 10s and 30-year treasuries, which shouldn't happen. So what we've really done to really position your accounts is a lot of buying individual U.S. 1 to 2 year treasuries. Along with that, we have a large portion of SHV and SHY, which are just ETFs of really the short-term dated U.S. treasuries. So very, very, very safe type of investments. And what we're really trying to utilize those three investments on is the interest, right? The interest is around 5%. The dividends on the SHV, SHY is more of a play of the interest rate environment that we're currently in. On top of that, you can notice that we are still very short on the S&P 500, Russell, NASDAQ, Bitcoin, high yield bonds, which if credit seizes up, high yield tends to perform very poorly in a market environment like that. And then a couple individual, companies as well. Additionally, we have a large amount in U.S. dollars still. In an environment like this, when people are trying to run for the hills, they're not going to emerging markets. They're going into more safer assets like the U.S. dollar. Of course, we have some gold allocations as well. But honestly, one thing that we're really utilizing the last week is make sure that all of our clients don't have more than $250,000 worth of cash reserves in their accounts. So the FDIC only covers up to $250,000 per person in accounts that are just in cash that aren't invested. So that's another kind of major way that we're playing the safety route of, if this credit squeeze happens, if banks go under, hey, your cash is still in safe harms as well. Besides that, we're going to be watching this market real closely this weekend. But I'll just kind of turn that over to Jason. I think you have a couple more things you want to mention.
Actually, can I interrupt real quick? I got two more small things. The S&P is now flat on the year. So for all of you thinking that we missed this run up in the markets, guess what? It went up 7-8%. Now it's back down to zero. Number two, based on what Michael was saying, right, with our gold allocation, the U.S. dollars, the shorts, the massive amount of U.S. government treasuries, we really only have one security, as Michael said, which is the defense ETF. So we got 3% in defense stocks because, frankly, we think we've started World War III, unfortunately. But literally, your account is set up that if we walk into Monday and we have call it a 20% decline, which is incredibly rare, obviously, we should make anywhere from 3 to 5% that day. So that's what our portfolio is set up for, right? But you need to understand, going forward, guys, if you thought the volatility was crazy up until now, it's going to get a lot worse. So get ready for 300, 500, 700 point moves up and down from here. It's going to happen, and it is happening. And that's what phase 3 of a bear market does. And now that we have effectively the beginnings of a bank run, it really gets wild. So we're not going to go totally nuts, like take you to 50% short, because hell, if the Fed does something this weekend, this market may be up 500 points on Monday. It's crazy. So anyway, I digress. Jason, take it away.
No, that was great. So I just wanted to discuss just one detail, because the crypto market has imploded. Everybody knows it's imploded. The three-legged stool that we always talk about, 2 of the legs are pretty much broken. Last leg still stands, which is, for all intents and purposes, the most liquid stable coin in the world, which is Tether. And so what occurred with the breakup or the FDIC coming in and taking over Silicon Valley Bank is that, as John had said, most PE firms, most private companies, tech companies, pretty much everybody in Silicon Valley uses SVB, which is what I'll use from now on, so we don't have to say the whole name. But the other group that uses SVB is the crypto universe. So not only did the crypto universe get imploded over the course of the last, we'll call it year, but the fact of the matter is that there is another company that will probably go out of business, and that is Circle. Today we learned that Circle holds about $11.4 billion, according to their public statement on March 2nd, $11.4 billion of reserves at Silicon Valley Bank. Well, they can't get those $11.4 billion of reserves. So what's going on? US dollar coin, which Circle owns, is now being sold in large amounts. The only liquid asset that they can really go into, that they can funnel all of that money into, is Tether. So that's why you're seeing Tether reserves go down, because they have to meet the demand of all these sales of the US dollar coin. So Circle will most likely, unfortunately, go out of business. US dollar coin will probably no longer exist. Tether again starts bringing in a large portion of assets. I don't know when Tether dies, but it's such a scheme that who knows? But the fact of the matter is that's the last thing to go on as of late in the crypto universe. But that's all I have for you. We're going to try to make this pretty quick. Do you guys have anything else to say? All right, cool. So guys, as you all know, we're going to do these short videos when things go a little crazy in the market. I would suspect you'll probably see more of these over the next couple of weeks. But I hope everybody has a great weekend. And if anybody has any questions or concerns, shoot us an email or give us a ring. But have a great weekend.